Hi, good morning, everyone. This is Jeff. Tim's out today, so we're going to shoot you a short video, just going over what we see the markets doing, the fundamentals that we're seeing come across as of right now, some of the macro data that is coming through in the next couple days. We'll want to talk about that, and just kind of what the charts are starting to show us. We do appreciate you coming on and listening, and please, after this video, if you have any questions, please give us a call, or if you have concerns you want to talk about, don't hesitate. First, we're just going to talk about the conditions report that came out on Monday. Starting off with corn here, uh, the conditions actually lowered from the week before. We're at 61% good to excellent ratings across the U.S. Obviously, there was big drops in Kansas, Missouri, Colorado. There's Nebraska. There's been some big drops over the last couple of weeks. Last week we we're at 64%. The year before we were at 64%. So we're lower than we were last year at this time, which is kind of a good indication that we may not have the great conditions we have. As you know, there's been pretty good drought in western Kansas, western Nebraska, western Oklahoma. Texas is burning up. Seeing a lot of acres starting to get taken out, either with silage or just complete abandonment on dryland corn in those areas. Western Iowa is fairly dry. Now we're getting a little reprieve here this week. It looks like, looks like the weather's going to turn hot and dry again from there. So uh, that's just kind of the corn conditions we're seeing at this point. Soybeans conditions, same thing. The conditions report went down just a little bit. This week we're at 59% good to excellent. Last week we're at 61. The year before we were at 58. So kind of about the same as we were last year on the soybeans. It's still pretty good across the U.S. for them, but if we get this hot, dry weather we're talking about in August, it all depends on if the soybean plant can hold on and not drop uh, its flowers and pods, and you know how that works out if we get hot and dry in August and we don't fill correctly, and especially in corn and beans, how that can hurt a crop. So just keep an eye on that. Let's go ahead and pull up the weather here on the 8 to 14 day temperature outlook. I mean, it's really showing hot and dry, especially up in the major corn belt, and below normal temperature or precipitation. So that can really affect some of the later planted crops as far as its pollination and grain fill in both beans and corn. So watch for that. We want to keep watching our crop progress reports to see if they keep lowering, as that'll greatly affect our balance sheet moving forward. So we pull up the our WASD we've got going on. We went through this already, but we've had some estimates come out from some major players, and they're starting to lower their corn estimates. We've got Arlan Suderman from StoneX coming out. He's saying 174 and a half. Graincast, which has been highly effective calling the national yields, uh, they're down to 171 on corn. So even at Arlan's 174, we're down to 1.2. If we go down to 171, like Graincast does, we're below a billion. We know the USDA tends to find bushels when those things happen, and we can't predict that, but just keep an eye on that yield. And we all know that we kind of ignored North Dakota and South Dakota last year, so keep an eye on it, and we'll keep you updated as well. We have a chance that the area harvested goes down quite a bit because of abandoned acres. So moving on to soybeans here. Soybeans still pretty good conditions. I mean, we're still looking at the mid 51s is what they're predicting. So not a great, we're not seeing that lowered at this point. Still really tight on the balance sheet as far as beans. We're seeing bean meal takeoff with the crush numbers are really good. China's making money on hogs and their crush margins, so the meal looks like it's taken off and supporting this market pretty well. And over the last couple of years, when meal's gone pretty high because China's importing it, soybean price has been supported really well. So keep an eye on that. Some of the macros we want to talk about coming up. We got the interest rate meeting today. The market's expecting a 1.0 interest rate hike today. Anything below that, could really support the commodity market. I think everybody expects one, so I don't think it'll really hurt the market outside of maybe just some algos trying to short it a little bit. But if they come out, at 0.5, we really could see this thing take off. If it comes out something that's not predicted or below what's predicted in that respect. Other things we've got, natural gas is going extremely high again due to the Russia European kind of conflict with the Nord Stream flow. Russia's limiting the Europeans on gas, whether they're doing it on purpose or for maintenance. Who knows what the real story is there. Also, the European is in such a good drought. They're looking at importing grains, so that's really going to support our market and the Brazil market. So it really is really good for us if that keeps happening. Also, we got the Russia-Ukraine news that they signed the deal that supposedly going to be letting commodities exit Ukraine. We'll see how that plays out. That night, Russia, after the signed deal, Russia, bombs a port, supposedly at a military target. So just see how that plays out. I really think it's part of Europeans' drought situation that they need some exports. They need to import some grains. So obviously, we benefited greatly from the Ukraine conflicts as far as our prices went when that all went through. So we'll see if that's already priced in as far as the exports, or if that's going to hurt us some more. We're going to jump into the charts here. Find the right one here. Okay. This is obviously November soybeans. We've been talking about the fib retracements off this downturn. This morning we are hitting the 38% retracement. That's kind of one of the targets we have, and we said we'd watch how it reacts when it gets up in here and how it gets there. Well, we're pretty impulsive on, we had a short-term gap on the overnight on Sunday, and then we actually had another gap Monday night that remains open. So it'll be interesting to see if this is a breakaway gap. If this is a breakaway gap, then we're going to be really patient on what we're seeing. I mean, if we turn around and fill it, it wouldn't surprise us at all, and then maybe go back up again, and then we're probably going to be looking at making some sales back into our range we talked about, 14 to 1470. So be on the lookout for that. But this looks really impulsive at this point, so we want to be patient and just let the market tell us what's happening. Watch the fundamentals and make decisions from there. The corn market, kind of the same thing here. We've got a gap from Monday night, also a short-term gap on the kind of the hourly 240, 240-minute charts on Sunday night as well. Corn tries to fill gaps a lot, and they tried to push it Monday to fill that short-term gap and didn't get it done, and yesterday. So if we keep popping here and going pretty impulsive, we're going to be really patient and just, again, letting this market tell us what's going on. We'll be really paying attention to the 640 level at the 38% retracement of this whole move down. From 640 to 670, just trying to see how the market reacts and go with that information that's telling us at that time. We'll get information out as fast as we can through texts and emails if we decide that we need to take action for any new crop, especially for the guys that don't have anything on at this point. Again, if you have any concerns with price levels the way they are now, please don't hesitate to call. But just looking at the basis levels, you know, we have almost record high basis levels here. So we just want to, that's telling us we're still short old crop. Great demand for new crop yet. Our basis levels here have gone up in the last couple of weeks, even on new crop. So, you know, there's a lot of bears saying, you know, we don't have exports, our demand's down. Yeah, we're not getting the new crop export sales, but our basis levels are telling us something different about demand at this moment. So we'll keep an eye on those things as well. If you do need to set some basis to make sure you got a home for new crop, please give us a call. We can discuss it. You know, we have done some for some guys that need to get that moved during harvest. So wheat, moving on to wheat, Kansas City wheat. It had a really impulsive day up yesterday. It's kind of following corn, and if you look at basis levels of corn versus wheat, especially out in western Kansas, I mean it's in the end of the feed ration. Reading reports that wheat's in the world feed ration now, so it's being supported by the corn market. It's not like we raised a record crop. Yeah, world stocks are up a little, but as long as corn keeps moving, we just don't see any weakness in the wheat market either. So again, we're gonna keep watching our fib targets, seeing how the market reacts to those fib markets on the wheat here on this move. 38% retracements up at 1030. You know, that's a pretty normal market, normal place where we'd have a lot of resistance, you know, all the way up to 1170. So we kind of want to keep watch on those areas and just see how the market reacts. Again, if this thing gets impulsive, we're going to be really patient to actually want to do much as far as old crop is concerned. You know, if you still have some of that left, or maybe even look at 23. So we'll just keep an eye on it and let you guys know what we're thinking. Again, if you have any questions, give us a call. You know, I'll pull up the soybean meal market. You know, this is showing how impulsive the meal market is right now. It looks like it's trying to go to new highs, and so we can't drop our soybean price if meal's going to go to all-time new highs. So we just see a lot of support at this moment. So we'll keep an eye on it. Again, please call us if you have any concerns. That's about all I have for you today. If you have any questions, give us a call. Again, trading in futures and options carries significant risk. Do not trade more than you can afford to trade in light of your financial conditions. Have a great week.